I've been back testing because I've been trying to add Euro NZD to my pairs that I would love to trade. So the thing is, obviously the risk to rewards on those pairs are pretty high. So like you can't really get 15 pips out of it. So what I've
Right.
been doing is I've been actually aiming for 50 pips, but my stop loss for them to make it like a 1 to 2. Usually I would still do a 1% on my account and then do a stop loss of 25 so that this way it's like a 1 to 2. And
Yep.
it like the trade has room to breathe.
Yep. That's good. I mean, so you're going to find essentially that, on the NZD pairs, AUD pairs, particularly more on the pound NZD, pound AUD, you're going to have to use a higher threshold when it comes to the stop losses. And that's just comes with the fact that, not all pips are created equal on those pairs. So that's something that you're going to run into or have to do essentially, or adjust to those specific pairs. So we did a study on pound AUD.
Hey.
And over the year, essentially we found that if you would have just stuck to a 15 pip, stop loss on it, the trades available, essentially the small trades that were available are very small as far as the amount of trades that you can take. Now, if you actually took that and went up to 30 pips, you actually got double to sometimes triple the amount of trade setups that you could have taken, right?
Right.
So I think as long as you have the data, of you going back to being like, hey, you know what, if I switch it from 15 pips to 25 pips, hey, now I can actually get into a lot more trades. And those trades are actually being, successful as long as you can get a 2-to-1 risk reward ratio. That's going to be huge. And I mean, on those particular pairs, 50 pips is not really a big deal. They kind of do that like, 3 times a day. So it's something that's definitely good that you can do. You just need to, be aware that you're risking more. So because you're risking more, you need to basically adjust your lot size for that as well.
Yep. Yeah, so I mean, even on those, like I was even debating, like I might even leave those for like a month, the money trades kind of for the euro pair for those exotic pairs, since I have to make those stop loss, those sizes,
Yeah, exactly. Okay.
Yeah.
Let's see. Let's talk about the continuation trade on London, New York on GJ. Well, let's pull up GJ real quick. Let's see. So there's a continuation trade on GJ from last Friday, like this one here, from London to New York. Okay. So you're talking about this particular trade, James? Okay. So is this a trade that you took or anything like that? Okay. So what did you end up getting out of the trade there, James? $30 pips. Okay. And was this something that you took in like New York, or did you take it in London and just basically held it? New York. Okay. Gotcha. So I'm going to assume that you basically took basically this trade here. Is that correct? Gotcha. Was there any other trades that you took that, or for that fact, that anybody else take any trades on GJ at all this past week?
Not particularly GJ, but EJ.
EJ. Okay. What?
It was. Let me pull up my.
Oh, okay. So,
Let's see.
James, as far as the continuation trade goes, the continuation trades are pretty simple. To the logic behind it is to understand what's going on. So, if you have an Asian range, and then let's say you have the box here for the London, and then you have a box here for the New York. So let's just say that the price is moving like this on Asia, and then it shoots up and it gives you a setup during London that you could potentially take. Or let's say it may not give you a setup during London to take. Essentially what happens is, to get a continuation trade, you would basically want to be, when New York opens, you want to be not at the high, not at the low, but in the middle, right? So we know that every day price makes a high and it makes a low, right? So at the opening of the US session, if you notice that you're not at the high and you're not at the low and you're in the middle of that range, very likely you're going to get a continuation of essentially what happened during the London session, right? So in this case, basically, in this case, it would look like this. The London session would be like this. A retracement would happen between typically around the 7 to 8 a.m. time, which is basically the gap in between the two boxes. And then, I would say 8:30, 9 o'clock a.m. is when the continuation trade will just continue on from whatever the move was that it did during the London session. Does that make sense, James? But a continuation trade, all it is just continuing whatever the move was from London. So just like it was here, it's just a move down, a step back, and then just a continuation. So if you even go back to to this here, it's right at 9:15. Yeah, so 9:15 is when it started back up again. And all this is just a retracement. So let's say, you're about 40 pips essentially from the low of the day, or the perceived at that time, the low of the day. And of course, you're not anywhere near, what the high of the day was. So you have the high and the low of the day, and then you're here, basically 40 pips away. Now, this distance is going to be different, of course, every time. It's not going to be the same every time, but you're going to notice that you're not anywhere near the low of the day. So if you're not anywhere near the low of the day, obviously there's no way you can trade a reversal off of that. And so because of that is when, you have a very high likelihood that it's just going to continue in one direction. So essentially you just get this.
I have a outside question, kind of.
Yeah.
Could you use a fib retracement?
I don't know. I've never used it like that before.
Never.
No. Let's see, what's the fib?
Shy. It's like almost
Right at the
28.
23.
Mm-hmm.
So, yeah, I don't know if that would have any kind of correlation to it or not, but if you do find it, that'd be, another way we can use basically like confirm,
Yeah,
stuff.
because basically what I'm studying right now, I'm doing fibs, but like I took in out the 28 and the 38.2 and basically done 50% basically, if it's 58%, 50% or 68.
Uh-huh.
And so far I'm getting good results. So I mean, I'll keep you in the loop if in terms of what I find out in my studies.
I know that there is a trade. There's a trade called the 2661 trade.
Mm-hmm.
The 2661 or 2601 or something like that. Basically, it's just a trade where you have an M and then it retraces back to the 61.8,
Mm-hmm.
and then you enter here and then drive it down is basically the point. We would measure it like you would do a fib extension from here to here,
Mm-hmm.
and then the extension would be, I believe, whatever that 212 or something like that. Whatever that fib extension is on a fib extension tool. I don't really use this too much, so let me see. 27 whatever this is, 272.
272.
Would
Okay.
be the target essentially from a let's say if the retracement was from a 61.
Mm-hmm.
So basically the trade would be like from here all the way down to here.
Mm-hmm.
Is the trade. And basically it's like it says, because since if you're scared, let's say if you're scared to get into an M, right? You're like, oh, we're scared to get into an M here because we don't know if it's going to do, if it's the right time or not. Well, then you could wait for this retracement to happen, and then you know that that's the right time to get into it.
Mm-hmm.
But I would think you would want to identify peak formation high first.
Definitely.
But let's see. So I know. Oh, Nor wanted to see how do we do trades on a Wanda. So if you're using any of the brokers, essentially that TradingView allows you to use, and you wanted to use this as kind of like your trading platform, so you don't have to use MetaTrader 4. Obviously, the first thing you would do is go to the trading panel at the bottom, and then link up your live or demo account, whatever. And you have a bunch of brokers here. So if you have an account with these brokers, then you could use it. But once you essentially go in and, sign into the account and go ahead and have it active here on the account, essentially what you can do is you can go ahead and have the little tool here, the panel here for trading. Now, if you go to the settings in TradingView and you go to trading here, you can basically have it, you can make all the setting adjustments you want. I have it like this. If you want to copy this, you can copy it. It doesn't matter. But the important thing is show buy sell panel, which is basically how you place the trades. So let's say you wanted to place a trade on, I don't know, on Euro NZD, right? All you simply would have to do, and you wanted to buy, let's say, let's look at this real quick. Okay, should we buy or sell this? Anybody? Buy or sell? Buy or sell? Sell. Okay. So if you wanted to sell, all you simply had to do is make sure that this quantity here is adjusted correctly. So the quantity that for example, Lawanda uses, they use units instead of like lot sizes, right? So 100,000 units is the same thing as a standard lot size. So let's say 100K means that you're trading a 1.0. 10,000, 10K is basically a 0.10, and then 1K is micro. It's a 0.01. Okay, in terms of units. So just make sure that the unit number is correct. And then let's say you just click on sell. And then it'll automatically put a sell for you in here. Now, once you do that, you can right click on this and say protect position. And then it opens up the options for you to put in a stop loss or take profit. And ideally, you can just put in the number. So you can literally just put in, I want a stop loss of 15 pips. And then let's say I want to take profit of 30 pips, right? And so it'll automatically change the numbers for you. And then you just click on modify. And then it puts it on there for you like that. Now, the cool thing that I like about this is that once you have it on here, you can essentially move it as much as you like. So you can just drag it basically wherever you want, and it'll drag it or drag the take profit wherever you want. Drag it up, drag it back up again. So it's one thing that I like. It's super easy, and it's, you know, very convenient to do it that way. Now, I know that originally, if you go in here and you don't have like the settings like this, it's not going to behave like the same way. So it'll show like a bunch of different things depending on what you have selected here. Okay. So if you don't have it set up like this, then you'll probably see something else. And what'll probably happen is you'll probably see like this right here, this option set up for you, or actually more like this right here, where you have the market, limit, stop, you know, order price and stuff like that. You probably see that than anything else. So if that's the case, then, you know, that's why that shows that. But if you just have the settings like this, how I have it here, as soon as you just click buy or sell, it just puts it on for you, and it doesn't, you know, do anything crazy. And then you can just right click, protect, and then do your thing. And then if you just want to cancel it, you can just click on the X and it'll close the position for you. Does that make sense, Nor? Yeah. So it's super easy to use. And so it makes it very convenient, obviously, if you're using, you know, TradingView with the indicators already on there, to go ahead and just place a trade, because you can just go, you know, pound or euro AUD and make sure that as long as this is correct, then you can go ahead and just click on sell. It'll sell it, right click, protect position, and then you can, you know, type in the numbers 15 and then 30 and then modify, and then boom, there's your stop loss, your take profit. All right. So weekly, daily prep and analysis, how much work need to go into that? I mean, so the majority of the work that you're going to do is going to really just entail into your back testing. And essentially, once you understand, you know, the concepts of levels, cycles, and stuff like that, I mean, you should be able to go up to a chart and just look at it real quick for less than, you know, 2 minutes and see where stuff is at. If you can't see anything, or you're having a hard time identifying, you know, where you're at or cycle or anything like that, then it's probably not going to be the pair that you want to trade, because if you don't know where any of that stuff is, then, you know, potentially you're going to essentially gamble that trade away if you try to take a trade. But I mean, as far as your weekly and daily analysis, I mean, the analysis that I do is very short, quick, and and to the point. It takes me like maybe 5 minutes, if that. Obviously, for some of you guys that are just starting, I mean, it's going to take longer than that, obviously. But Travis, about how long does it take you to do a quick analysis on a pair?
I limit myself to at least 2 to 3 minutes.
2 to 3 minutes, right?
I
If
don't
it's
spend
longer
a
than
lot of
that,
time.
it's like, you're like looking for something, that's not there.
Mm-hmm.
Yeah. So you just want to keep it really, really simple. If it's not something that you can see right away and understand what's going on, it's probably not going to be something that you want to trade. Just because, if you don't understand it, how the hell can you possibly trade it? Or if you have any kind of confidence in how you're going to trade, that particular pair, or that setup. Does that make sense, James? But yeah, the majority of the work that you're going to do to help you understand and see stuff and cycles and levels and all that is going to be all through your back testing. And so the more that you do on one specific pair, obviously, the more that you're going to feel more comfortable with that one pair. So like, I know, what is it, use what, Euro JPY, Travis, a lot? Is that right?
Yeah, Euro JPY I use like majority of my time, 90%.
Yeah.
And then the rest is probably like 10%.
Yeah. So all you need is literally one pair.
Yep.
You can get to know just one pair. I mean, you know everything about it. You'll know everything that it likes to do, how it likes to behave. And I mean, that just gives you that much more confidence when you're looking at the different pairs and stuff. So I know, Travis, what did you take on, was it Euro JPY you said?
Yeah, Euro JPY, I believe it was Thursday. Let me see. It was an interesting one. Yeah, I took it. Let's see, that was Friday where you had that big drop. I took it Thursday around the New York session. Can't remember. Oh no, I took it during. I think it was London. I'm not sure. Probably London. So I remember I took it from there, and then that pin is where I took profit at. I thought it was playing me. Yeah, there you go. So like at 8:15.
8:15. Okay.
8:15 on January 16th. Because there was that was the weekly high. So I felt like it was a good type 1 setup because of that. And then even though it kind of drawn out, it was like literally the beginning of the New York session, and the EMAs were crossed. So I felt confident in taking that because the weekly bias, the higher time frame bias and the weekly high where it was at, I was comfortable taking that trade. And then it went all the way to the Mayo, so I took profit at the Mayo.
Gotcha. So that was 3 days of rise basically, or 3.5 with this little bit. So you have 3.5 days of rise in one direction. Wednesday, Thursday, now you're looking at possible, midweek reversal essentially, or at least some kind of reversal to happen because this is already broken the previous high that it set on Tuesday. And so let's see if we play what happened the rest of the day on.
Yeah, it was that day. It was playing a little bit of games because I actually honestly thought it would go further. So I mean, to play safe, I took profit, and then literally the next day, melted.
Melted, yeah.
Yeah, because I mean, if you look at the levels, literally, I think that's the peak formation.
Well, if you remember, I don't know if anybody's seen this before. There is a video that's on YouTube that I did called the iceberg effect. Has anybody seen that video? on YouTube?
I've seen it.
You've seen it? Yeah. So it's basically got the same effect here, right? Where you see basically the points back and forth, and then literally it just drops off, right? And so, on an iceberg, you only see basically like, what is it, like 10% of the actual iceberg itself, because all you see is just the little points that it has. You don't see the actual huge body underneath. So basically this is literally just like that, like an iceberg effect, and then it just drops. And then so this should be peak formation high right there. And then you're just building out basically one right now. So look at that from the previous week too. Nice. Yeah, this is a good pair.
Yeah. And it was a nice continuation trade in that previous week too. I took right at that W.
Where this one right here? Yeah.
Yeah. I took it during the London session. I should have held it.
Yeah, well, that would have been nice, man.
Yeah.
Jeez. That would have been good. What is that, like 100 pips in the direction?
God damn.
In 2.5 days. So yeah, and really 3, 4.
It's probably
5.
like 200 pips.
Yeah, well, with the following week added onto it, yeah. It could definitely go that long. So, all right. What are the questions?
Can you use the market maker on the commodities?
I haven't back tested it, so I don't know.
Oh, okay, because basically I was looking at gold USD. So I thought about it.
I know that I know Colin trades it on oil, and he says that it works on oil. So, but I don't know on gold. I haven't back tested it on gold. So, but I mean, if you just look at gold, can you see patterns on gold? Can you see type 1, 2, 3 patterns on gold? So, what does this look like here? Does that look like a pattern on gold? Looks like you may have one leg here, another leg here, crossover here. So that's one.
Another right there.
This one here.
Pen to the low, yeah.
Yep. There's not really nothing there. Yeah, there's one here. There's a W there. So yeah, I don't know. We might have to back test this and see if it works or not on here. But I mean, definitely the things are there. I just know that gold is it's extremely volatile, obviously. So it moves like pretty crazy. So
yeah, because I was even trying to think like, what account size do you really need? Like a stable account size to even trade like a pair like gold,
Well, I mean, the fact that you can go like 100 pips in like 5 seconds. I mean, it makes it pretty hot. I mean, I know some brokers have to where you have to have a certain amount of money to even trade gold.
Yeah, and they only do a certain lot size.
And they only do a certain lot size, exactly. So depending on your broker, that would also depend also. But I mean, there's a lot of things here that, you know, kind of I don't see. I see some, but it's like very inconsistent as far as, you know, whether or not you could get consistency in those particular types of setups.
Mm-hmm.
So that's the only thing that I would be concerned about, is just the consistency of trying to find setups with just those specific patterns or not.
Mm-hmm.
But yeah, there's like, here's one right here, which is good. There's one that happened during New York session. Looks like this is one that could have happened the London session. So yeah, there's another one there that could have happened. So here's another one. Looks like
it looks possible.
So yeah, it looks like it's possible.
Looks possible.
So
we'll try it out.
There's another one there. There's a type 3 there. So if somebody wants to back test this and to find that or not.
Get it?
That indeed. Did anybody have trouble with the test at all? Seemed pretty straightforward on the test.
Yeah, I didn't have any problems.
Yeah. A few confusing ones. Yes, that was the point. The point was to make it definitely have a couple confusing ones there. Yes, absolutely.
That was true. There was a few head scratchers.
Yeah, and so those few head scratchers are the ones that you should be aware of, like that they're all not going to be perfect or anything like that. So let me pull up one of the tests here so we can look.
Hey, Mark, I got a question.
Yeah.
On the dots that appear on the 5 and 13 crossovers, is that just during those London and New York sessions? Because sometimes they appear, sometimes they don't. They don't appear.
Right. So the way the dots are configured is they only are supposed to show up when there's a crossover of the 5 and 13 that happen inside of the London or the US box.
Okay. I know sometimes they didn't appear, even with the crossover. I mean, I did.
Okay. Do you have like any examples I can look at or anything?
Yeah, I'll find one and send it to you.
Okay, yeah, that'd be great.
Okay.
That way we can look at it and see if there's any adjustments that we need to make on the code of it or whatnot. Let's see. So let me just bring up these examples of the test here. Yeah, there's like 30 some. I didn't think there was that many. Jeez. All right, cool. All right, so let's do this here. Sure. All right, so can everybody see that?
Yep.
Cool. Too thin. All right, so class participation here. So this, is there any setup on this one here on the screen? Any setups at all that you see on this particular one? So James, what do you see as far as the setup goes? Type 1, 2, or 3? Type 1. Okay. Where do you see a type 1 at? Type 1 London. Now for it to be a type 1 London, right, we'd want it to be over this bar here, right, which is a high of Asia. 2 Asia, right. So type 2 setup. So this being first leg, this being the second leg going down. Right, so that would be that. All right. How about this one? Any kind of setup on this one? What's the setup on this one?
I don't really see anything, Mark. I mean, I would sit there and say maybe catching the that drop like on the third candle into the New York session.
Okay.
It's really not it's not a textbook setup. It's just kind of like predicting if it's going to drop to another level, in my opinion.
Right.
It's a
right.
type 3.
Type 3. Okay. So on this example here, you have a 29 pip range. Okay. So it's normal range. We have essentially price that comes from the top of the range down to the middle, goes back up to the top of the range, comes back down, and then goes up. Right? So that's a type 3 there. And then you have essentially, this creates the high of the day. So again, what's your primary job is trying to trade this in intraday strategy as to what trade off of the high or the low of the day. So essentially, you know, you're right, this does not look like a textbook, you know, setup, but you basically have 3 candles straight across, and then the drop comes here on this particular candle. Now, another thing to consider is that you really don't know, right, where the EMAs are, right? So you don't know if it's here or down here where they cross. So granted, the answer to this, as far as what the setup is going to be a type 3 setup, because that's the only clear, obvious trade setup that you can see from this. Does that make sense?
Also, I wanted to just to make clear, because like type 3 subs, I manage them very closely. Because for instance, sometimes it'll look like this and be a type 2, but what I realized with type 3s is like they always have these wicks that come about. So I was just like, every time you see the wicks, I'm just like, I just close the trades because I assume they're gonna do a type 3.
Yeah.
Yeah.
All right, so this one here, what are we looking at this one? What kind of type is this?
Multi-session M type 1 setup.
It's definitely multi-session M as far as it being in the session here, 1 and this here. We're at the top of the range, right? So this would be a type 2 setup.
Oh, type 2. Okay. I'm sorry about that. I was mistaking the the blue tracer on the bottom as the box. I'm sorry.
Okay, yeah, no worries. So yeah, so type 2 setup right here. So yeah. This one here, any kind of setups on this one?
It looks like you have like an M pattern. I would say probably about what is that? 1, 2, 3, 4, 5, 6, 7, around the 7th or 8th candle of the of an M, like of a second leg M to enter on.
So right here.
On the in the London New York box. I'm sorry.
Okay, gotcha. So this. Okay.
Yeah,
So yeah, so there's going to be the session itself, or the trade, right, is essentially a trade that's has a multi-session M like that. Now, there is also a trade setup where this right here starts out, here's the first leg, second leg, come down, right? And then it stops where? In the middle of the range, right? So there's another possible trade right here as a type 3 first to begin with, and then moves across to do a type 1 across to the US session. Does that make sense? All right. So what about this one? Is there any setup at all on this one? Type 1, yes. So you have a type 1 setup here. How about on this one? See, we're moving out straight in the middle here, right? Sideways. We're in the middle of the range. So it immediately moves up, comes down like it has a second leg to it, like an M, but obviously it just moves sideways, comes down. Now, here's where you get those let's say continuation trade, right? So this is not like a type 1, type 2, type 3, but it is a trade that you could take in the New York session, which is right here, essentially, which is a continuation trade. So if you think about where you would be, you know, let's say at this particular point in time, if you block all that off, right, you're not at the low of the day perceived, you're not at the high of the day perceived, you're in the middle, right? So what happens when you're in the middle? Very high likelihood that essentially you're going to get this. So it's just a continuation trade from the New York session. How about this one here? What do we have here?
Type 2 setup.
Type 2 setup, right?
Yeah, W.
Right.
Between Asian and London.
Right, exactly. So first leg here, second leg here, and then you take it all the way straight up. And then, of course, during the US session, you know, you're going to have essentially a reversal that happens off of the high of the day. It just doesn't present itself as like an M pattern.
Yeah, I see like that. Can I do some drawing over there to
Yeah, yeah. Go ahead. You can click on the drop down and click annotate, and you can draw.
where is it? Where is it right here? Is annotate?
Yeah, there's a. If you click on the drop down box at the top, it'll give you the option that says annotate, which is the ability to draw.
Can you show me with the arrow? What is it?
It's going to be up here when you. It's across the top of the Zoom.
Click view options, and when you go to click view options, go down. It's like the third from the bottom.
Okay. I see this one like type 1. Is that wrong?
So for this to be like a type 1, right? You're saying that it's like this. That's not really like an M. You know what I mean? Like you want this M to, if it's going to be that type of an M that's going to be like this, then there's like 1, 2, 3, 4, 5, 6, 7, 8, 9. There's about 10 candles in between this here. So by the time you were to get into this M, it'd be like you're talking about literally 3 candles, you know? Now, I don't know how far these candles or how much that distance is, but I mean, I could possibly assume that it's maybe about 20 pips or so. If you're to talk, you know, these 2 candles here, considering that the whole thing from the top to the bottom is about 63 pips or so. So. But yeah, so that's that one there. All right, how about this one here?
I
So some of you guys are saying type 3, others are saying no setup.
yeah, no setup.
No
I
setup.
say no.
Okay. Well, the first thing is, right, that we identify is that, look, price is coming out of the middle here, right? And so, and it's just literally like floating, right, through the middle of the range, right? So that's not really a setup that we want to get into. There is a small opportunity when we get into the US session where it goes up and then comes back down and pins it, right here on this candle. So being that this is essentially like 38 pips of a range, you have the potential to get, you know, some pips out of it. The problem is that unless you are paying attention to this, you know, you're going to get into the trade here. And then what are we looking at? You know, how many pips is this? So if this thing is about 38 pips, you're almost at half of it. So you're looking at a stop loss of about 20 pips or so to try and get, you know, another 20 pips. So your risk to reward ratio sucks. You know, so it's not that very good. And it's not really the ideal setup that we want. So this would be a no trade. Right, exactly, Felipe. You don't know if it's going to be 38 pips to begin with, right? So essentially, we're working under the assumption that if we're here, let's just say if this is what we see so far, and this is also what, like probably 11 o'clock or something like that. So you're late into the session. you're already going to be 20 pips behind as far as the move goes. And depending on where the EMAs are, you don't know exactly how far up it's going to go. So if you had, let's say, a 50 EMA and is going across price, like this, let's say, then you can at least try to measure it out to the 50 to see what kind of pips it would give you. But I mean, being something that close is not going to give you very much to begin with, So that's the major problem that you have there. And so it's not a very clear setup, and you don't know about how many pips you could potentially get, especially on a New York session. All right, how about this one?
It looked like to set up between Asia and London. And type 1 in London and US.
So a bunch of different stuff, right? What's the clearest setup that you see here? What's the best setup, the clearest one?
Yes, one. I see something like that over here.
Type 1 New York, yes.
Like
yeah.
Between this and this one, okay.
Yeah. So the real clear setup here is this one here.
Oh yeah.
The reason that this would not be a setup down here is because your range is only 10 pips.
Okay.
So remember, anything 15 pips or less, you really only want to trade a type 1. Right? Because it makes it extremely difficult for you when each of these candles here is almost the same size as the entire range itself of Asia, right? So it makes it very difficult for you to determine whether this is going to be a type 2, type 3, type of setup. So you only want to worry about type 1 setups when you have 15 pips or less out of that range.
Hey, Mark, in my homework, I had 2 different type 1 setup. I had one in London and then the one at the top there that I draw at New York.
Yeah.
The London, the first leg, yeah.
So this
that
one here,
yeah.
Yeah. Yeah, so this is, you're saying the other one too. So this would be like the W here that doesn't quite make it to the bottom because they already have enough people trapped.
That's correct.
Right. Good. All right, how about this one here? What do we have on this one?
Only thing I got is this one. Yeah, type 1 between London and US.
Right, there you go. Multi-session M between London and US, correct. The Asian range is very small. This is only 10 pips. So we want to see only a type 1 setup. If this range was, let's say, 20 pips, right, then this essentially could have been a type 3. All right, and then how about this one here? What are we looking at on this one here? Multi-session W type 1.
Yeah.
Okay. So it's multi-session W type 1. All right, how about this one here?
I have a question for this one there, Mark.
Yeah.
This one, I almost had it. Well, I had it at type 1 from London, coming out of Asia. But I was just wondering, was it a type 1 or was it a type 2 based on, and let me use the annotate here. You see, I have it here, but it's so close to the edge. I was just wondering, is it a type 1 or a type 2?
I think it's type 2.
It's a great question. So typically what you're looking at there is going to be a type 2 pattern.
Yeah.
And so the reason is because it's so close to the top of the range.
Yeah.
Right? You want a type 1 to actually move away from the range. You know, so this one being so close to it, and we're talking literally like, this could be literally like 3 pips, you know, 3 to 4 pips here. So, and it's right on top of it. So, yeah. All right. All right. What about this one here? Go ahead and think about it. I'll be right back in 1 second here. All right, so what do we got? Type 1 bounce off of the high of Asia, New York. So this is definitely a type 1. First leg here, you actually get like 3 legs here. Boom, boom, and then moves out. And then also in this one as well, you get during New York, you know, you're not at the time, this is the high of the day, low of the day. Where are you? You're here in the middle. So what is it? Also a continuation trade. All right. And what about this one here?
This one, type 2, London.
Type 2 London.
Yeah.
All right. Yeah, so essentially here, straight down. And then this is the low of the day. And you get basically a reversal off of that.
So, what is the trade over here? How can we enter the trade when the 13 and 5 cross over here?
So this is basically what you're going to notice is that there's going to be times when you're going to get basically a V shape or a V top or a V bottom, essentially, right? That does this. Typically, when it does that, it's going to have one of 3 patterns, and it's going to be a railroad track like this. So that's what this is here. You might have a star pattern like this, right? Or the last one is a cord of wood, which is just basically 4 stacked on top of each other like this.
Okay. Wait, hold a second. Start pattern this one to be on the bottom, I think.
Yeah. So you would have a star down here at the bottom.
Yeah, exactly. So it's not in the top.
Yeah.
Okay.
So if it's going up,
yeah,
right, you would have it at the bottom. If it's going down, you should have it at the top.
Okay.
Now, one thing I want you guys to understand with these V's, right, is that they don't always work out, right? So if you take one of these because you think that that's a V, a lot of times it'll come back and make the second leg, right? So just be cognizant of that or aware of it, essentially, that that's something that could happen. So that's why I stress right now for you guys just to worry about trading a second leg only. So a second leg M or a second leg W, because this, if you just start trading anything that's like this, they don't always all work out, and so your loss percentage is going to go way up.
Okay.
So
Mark, I had a question.
yeah,
So like I was just kind of like, I'm midst of, I guess, challenging myself, like just to see like if I could really trade like the morning star, evening star, railroad tracks and all that. Is there certain, like, I guess, for example, like if you see a railroad track, like a certain percentage of like, I guess, the bullish candle, how much it goes up by, like this is a more legit railroad track to how this railroad track would look like. Like, do you kind of look at those things? Like,
yeah. So typically, what you want out of a railroad track, right, is
mhm,
if you have essentially the two candles, you would want the two candles ideally to be equal, right?
mhm,
But as long as one of the candles is covering 75% of the engulfing
75%.
candle,
Mhm.
then you're good.
Okay, covering
It
75%
could be a
of the engulfing.
railroad track, essentially, is what I'm saying, right?
Right.
Yeah, but so if you get stuff like, you'll get stuff, sometimes you'll get stuff like this, where it's less than half or even half, right? The
Mhm,
point of a railroad track, right, is to be complete, right?
mhm.
But sometimes they fall short. And so I found as long as it's 75% covered, then you got a very good chance of it being an actual railroad track.
Okay. And then is that same percentage applied for morning stars and evening stars?
Yes. Yeah.
Okay.
Yep. Same thing. Same thing.
Mhm.
All right. How about this one here?
Mm, Type 2 between multi-session.
Multi-session type 2. Okay.
Yeah.
Yep. I definitely see that.
Then we have over here. It looks like a kind of W, but
Kind of W, but not sure, right? So right here,
yeah,
you're
yeah.
thinking that that's possibly the second leg right there to take it up, but it doesn't, and it goes back down again, right?
So this is a failed W. We can call this.
It's not even a failed W. It's just the fact that it's, if you're in the New York session, right, and you're here, I mean, you don't know where the EMAs are, right? So you don't know where they are. So if the EMAs, the 5 and 13 should keep you out of this trade,
Okay.
right?
Yeah.
So if you have the EMAs on here, it should look something like this.
Okay. Yeah.
So this being the 13, this being the 5.
So do you think that phi and W usually form when they cross the middle over here? For example, if we got another blue one over here, maybe the phi is setting. Do you think they will cross, like they're across
Where would that be that you're talking about?
over here? For example, if I have another, say, let me see, another two over here.
Did you draw it?
Huh?
Go ahead and draw it on the screen so I can see. Okay.
Yeah. Right. Like how do you how do you do this candle over here? But I don't see.
I just draw the little boxes, this little
Oh,
box like this.
oh, but how do you draw the little box from the?
So where it says draw, you can pick from a pen, from a box. You can pick different things.
Ah, okay, okay. Let me see. Annotate. So click annotate first.
Yeah, and then it should give you the options.
Uh, I see. I don't see the action to see the draw. Let me see. Oh, I see over here. Okay, I see. Let me see. Okay. All right. Thank you.
Yeah. So what is it that you're saying? If the candle was that big,
Now, in order for me to know that a W is valid, that it's a valid W without the moving average that we're doing right now, does this have to cross this middle of the W?
would this
Say,
be
right,
a valid
say,
W if it does that?
no, if this one had to cross the middle of the W, for example, if this is the W over here. This one over here.
Uh huh.
So in order for me to know that this W is valid, I have to see this candle cross them.
You'd have to wait for the crossover to happen, right?
Yeah, but for example, if we don't have the, the EMA, like we don't have it now, how can we know when a W is valid?
Well, in these examples here, you don't have the EMAs because I was wanting you guys to concentrate more on the
Yeah.
patterns and the actual entry, because we're going to talk about entries in tomorrow's video
No, but
that comes out, right? So the way that you would know if this is a valid entry or not is to wait for the crossover to happen that you would have on your chart.
and in order to know that this is a valid parent, what I have to say?
You'd have to see the EMAs being crossed over here. Price has to go above the EMAs to help you get into that trade. Because if you get into that trade early, like right here,
Yeah,
right, what happens?
yeah, it's my face.
Right, you lose, right?
Yeah,
And so
probably.
that's why the EMAs are there to help you with making that kind of decision, right? Because if you have the EMAs here, right, then you would know, you'd feel more confident knowing, okay, did it cross over, yes or no? Right? And the likelihood is that in this particular case, the EMAs never crossed over. The EMAs would cross
Yeah.
over here.
Okay.
So if you don't see the crossover, then there's no need for you to think that this is, essentially a trade here. You would just wait, And so if you're trading the US session, you have to understand that these sessions, so let's say you have the 5 and the 13 going across here, and then the 50 essentially goes like this, right? So you have to be cognizant of the fact that if you take this trade here because you think that this is a W here and the 50 is right here, well, how many pips are we trying to get here out of it? If you, let's just say, if you enter the trade here after this big candle, right? So you're let's say you're risking, I don't know, I'm going to call it like 15 pips, 10 pips or so. And let's say that 50 is like around here. What is there to gain essentially from you taking that trade?
Yeah.
You know? can you at least get essentially like a 2-to-1 risk to reward ratio by doing it? And what about this one?
Very clear. This one. Like one right here. Kind of a little confusing.
All right, so let's look at through the London session here.
Okay.
Right, price comes down, and we're coming out of the middle. Right, so not an ideal situation that we want to be in. Right, so it's not until it moves up that we get something that we could possibly trade. It's basically coming straight down again. Right, so this would be like that V top that I was talking about with a railroad track on it, like that. And then if you come down to the US session, you're talking, you know, this as a possible trade depending on where the EMAs are. So that would totally depend on that itself. But the clear setup would be something like this here.
Yeah. Okay.
I took a type 3 setup on this one from Asia and then to London because I remember you saying that, you know, when there's like about 8 candles between leg number 1 and leg number 2, that was the ideal trade, and then you'd have the EMA that would actually cross. That's why I took a type 3 on this one.
A type 3?
Yeah.
Where would be a type 3 at here?
Yeah.
Oh, I could kind of see. Yeah.
Yeah. Well, the question is though, this, if you're saying that this is a, here's the thing that I don't like about this, is the fact that you see how much space there is.
Yeah.
How price may have come down, and now it's basically floating in the middle. Do you see that? It never comes physically all the way up, and then come back down again. Even at the highest point, which is this one here, it never comes all the way up.
But
Right.
that's an indication that's not a good setup.
To me, it's not. No, you're right.
Okay.
To me, it's an indication that's not a good setup, because then I'm basically saying that I'm guessing at this. I'm guessing it's going to be a type 3. I don't like to guess.
What if you have the EMA cross?
It doesn't matter. It's what the candles are doing, where the candles are at, and having this much gap in between doesn't fit with what I want to trade.
Okay.
You know, because you have the low of Asia here, the high of Asia here, you know, here and here. Why is price just freaking floating here, not touching the top, not touching the bottom?
Yeah.
That's a problem for me. So that's why I wouldn't take that.
Yeah. When the market is like that, most of the crossing fail.
So, and then another thing as well is, if you have, you know, let's just say that EMAs are going straight through price, it's like, okay, well, I'm definitely not wanting the, not even interested, because then you're going to have dot here, dot here, dot here, dot here, dot here, dot there. Do you know what I mean? So it just makes it very, very difficult and not very good at all to try to take a setup. And yeah, you're right, Tom. So the Asian session is just barely over 15 pips also.
Question. So like, I just wanted to verify. So like, you would want to see it at least for, because I've seen this so many times. So you need price to at least come up out, like, even though like right now, you see how it touched the top of, actually, let me just do annotation so everybody can see like what I'm talking about. Yeah, so like right here, it's like even though it's a higher day right here, you needed to at least do like kind of like a higher day again, probably like say right here, come down, get stuck somewhere here, and then go up to kind of be a type 3. Because like
Yeah.
I
So
always
for
assume
me,
that
a
it's gonna
type
be like
3
a type
is,
2.
yeah, type 3 for me starts life as a type 2. Right. So where is the type, if this is a type 2, where is the second leg at?
The second leg has to come around right here.
Right, exactly. Has to come back up, and then you go down, right? The problem is that you don't get that second leg. The highest part that you get is this right here. And so you're kind of like, it's not really a clear and decisive setup, essentially.
Gotcha.
So if it's not clear and decisive, like, I'm just not interested in taking it, because I can just go to another pair. And granted, this is NZD CAD too. So, I mean, so it's just not one of the pairs. I had to go and use these like off pairs to find this stuff, like NZD CAD, and stuff like that not a lot of people trade. Here's another one here. What do we have here?
Type 1.
Type 1.
US session.
Type 1 US session, right? First leg, second leg, and straight down. So it's like what I'm saying. Would you rather take this trade, or would you rather be guessing on the previous one what it is? So you want to try to make it as simple as possible for yourself.
Now I have a question on this one there, Mike.
Yeah.
I saw the M, it was very clear to me. The only thing is that, in your examples, you never mentioned 2 legs into the New York session. So if we do see a setup in New York, with both legs, just like in London, you give the example of London, but never 2 legs in New York. So that's okay.
As long as you're getting the second leg in the New York session, that's perfectly fine.
Yeah, the second leg.
Yeah, you can have this. You can have this. You can have one that's like this. You could have one that's like this. You could have one that's like this. The important thing that you should care about is, where is the second leg? Is it in this box, or is it in this box? That's it.
Bonnie, where's my suitcase?
All right. And how about this one? Is there a setup on this one?
Type 1 W London. London in beginning of US.
Beginning of US. Yeah. So
Like that. This is what I saw.
right. Yeah. So the only thing that I would tell you on this is, if you're taking this, remember, you would be taking it literally right here. So that the likelihood of you having a let's say a crossover to happen on this last candle is very low. It would probably happen on this candle here, up here, right? So what I was trying to show you on this example here is that it'll look like a setup here, but it won't meet, let's say, the rules requirements.
Yeah, you call making
a trade.
Cross out of the box.
Yeah. So if you don't see, if you have to imagine that, that because you're getting in so late, this is an extended box here. So this is like 7 a.m. when this box ends, right? So you're getting in super late. And the crossover, it literally has to be on that same candle as well. So the likelihood of that actually happening is very low. So, and realistically, the only trade that you can, take that's pretty clear on this would be a continuation trade, because you're not at the bottom, you're not at the high, you're in the middle here. And so if this box is 28 pips big, then by the time you get here, you're about 15 to 20 pips away from the low. So that would be like the only possible trade. But I have this as essentially a no trade because of that.
Okay.
Okay.
Yeah.
Now, how about this one here?
Only thing I saw was this one. Here.
Right.
Multi-session.
Right.
And then over here, I see like a
Yeah. So this trade here would have been, like you said, the first leg was here, second leg here, and again, it's barely there, but it's there. And then essentially you would have to hold this all the way down to make your pips, because this is only a 20 pip range, So I think here's the thing, and we're going to talk about this in the video that comes out tomorrow, is, when you run into a situation like this, how do you know to get out, or how do you know to stay in? Because that kind of throws off a lot of people. Is, okay, well, if I enter this trade, how do I know that this is going to just, keep going down?
This number over here, we get it at the beginning of the London or at the ending? I think it's at the ending.
Those are going to be at the end.
Yeah. Then, for example, if I take that trade over here, say, for example, the crossing is over here. I don't know that this one is going to be 20. That's why, it looks like a value.
Right. So if you don't know that, let's say you take the trade. So let's say you take the trade, right?
Mm-hmm.
And you're here now.
Yeah.
Right. And then you start getting essentially stuff like this, a retracement. You see price coming back up again.
Yeah.
What do you do?
Yeah,
Do you freak out or something, or do you get out of the trade? You stay in the trade and stuff like that. So those kind of things is what we talk about in the video tomorrow.
Okay.
Is how do we know? Do we take a chance at this? Do we not take a chance on at least staying? Let's say staying in the trade is the really big one. Is staying in the trade.
Okay.
Do we stay or do we exit? Right.
So this one is a value W for you.
Close after the pinning candle. Yeah, so this right here, it can be a W, yes. This right here can be a W, yes.
Yeah. Okay.
It's first leg here.
Yeah.
First leg here, comes up, and then comes right back down, and then goes back up. Again, the for this to be a trade, you'd have to have the EMAs,
yeah, okay,
crossover, and stuff. But yeah,
I was just concentrating on the firing.
Right, exactly. Now that was the whole point of the exercise.
Yeah.
It's just to concentrate on the pattern so you know what it looks like over and over and over again.
Okay.
Yeah. All right. How about this one?
Wow. Over here, it looks like a type 2, but let me see something. First leg over
Yeah. So
here.
James says it's a no trade.
Yeah, exactly. No trade. Yeah. Mm-hmm.
Right. So Felipe, you're right. The only possible trade is a continuation trade here from London.
Okay.
That would be it. But it's not any kind of a type 1, type 2, or type 3. It's not any of that stuff.
Yeah. Okay.
So let's see here.
My problem with those continuations, like when it's not deep enough.
When it's not exactly. When it's not deep enough. Yeah, it makes you feel kind of unsure, right?
Mhm.
So yeah, if it's not deep enough, then just don't even worry about it.
Okay.
If it like literally, you have to ask yourself, is the setup clear? Yes or no? Right? Is there a clear setup that you can trade there? Yes or no? If you're kind of, I don't know, that's a no. You know, if it's a clear setup, you're automatically going to say yes. But if it's a maybe is the same thing as a no, because you're not sure.
Yeah.
And so if you're not sure, you're better to not just take the trade. It's better to just save it for something that is clear and obvious. So what about this one here?
This one is kind confusing because we got the first leg over here, and then the second. I don't know if it's valid. Multi-session.
Right. It's what it is. It's a multi-session. Yes.
Okay.
Now, I was hoping that one of you guys might have gotten, like, let's say, confused and said, hey, this is a type 3 because it hit the middle of the range and it came down. But the problem is that it did it outside of the box.
Okay.
You know? So that's a no trade. But you're right. The trade essentially is this.
Okay.
Mark, I got a question.
Yeah.
So, like in terms of multi-sessions to where the M's and W's are created from a regular, like all in one session to a multi-session to like longer sessions, is a multi-session M or W like the probability stronger than when it's done in one session? So, like, say from London to New York, from from a W that's created last week, like the first leg is, let's say, was created last week, and then this week is the second leg. Like, does the probability increase? I hope it makes sense like that. Like, as
The
you
wider that
as
the
the
legs are
wider that,
apart.
yeah, and the
So
deeper it is, so that you could actually see like it's a big W or a big M, like.
right. So the bigger picture of things, right? Think about the holy grails, right? That you ideally want to trade is the multi-session W's, right? Because those essentially appear like on the 1 hour chart. They appear like on the 4 hour chart, right? So these multi-session W's here, and let's just say that this is like the daybreak, right? And you have, let's say, Friday here and then Monday here. Then these trades are basically creating a peak formation low on a way bigger time frame. So these trades, essentially, if you can get them, if you can get like a type 1 setup here on a 15-minute chart here, then you're going to be able to hold these trades for a ridiculous amount of trend. It's almost like catching that multi-session W on Euro JPY that you were talking about.
Right.
And holding it for
Right.
like a week and a half.
Right. And then another thing, what I found, especially I found this during back testing, like sometimes I see that multi-session W form or M form, but then I could see that it's basically going to take off during the Asian session. So it's kind of like I just don't take it because it's in the Asian session. But in doing that, it's like I miss a whole pit move. So
Right.
I don't know if that, like, does it become discretionary at that point, or it's kind of like, no, forget discretionary. If it's not traded in London and New York, you just don't do it.
I would tell you that until you become comfortable with it, not to do it. But there is going to be, you're right, as you start to get to know the pair, you're going to have this move here basically happen at the beginning of the Asian box. Right? And so you have to kind of be like, okay, well, am I willing to take that risk here, or presumably am I willing to wait for a level 1 consolidation and then take it from there,
Right.
and that'll give me more assurance. But essentially that's going to come more, towards you and whether or not you want to take that risk or not. But I'd say
Gotcha.
multi-session M's and W's, from let's say one day to another day are going to be really good trades to get. But you're right. A lot of the times that these multi-session trades from day to day do happen during the Asian box because of that. So that's like the one bad thing about it.
Yeah.
But I'd say with anything, any of the rules can be changed as long as you understand why.
Right. And you tested it basically.
And you tested it exactly. So like, why would you, enter, let's say, a trade, let's say here, instead of, let's say, waiting for the crossover and enter up here? The only difference between you entering it up here or entering it down here is you're entering it up here because you want extra confirmation that that's the right move. When you enter down here, you're entering more of the fact that you know what the market makers are thinking and what they're doing. Right? So as long as you know and you're thinking like them, right, you know that what they're doing, because you see it over and over and over again through the replay of the charts that you're doing on that particular pair. So it's not a coincidence to you that this is being done, because you've seen it for the last 4 months being done over and over and over again. Because you've seen it done over and over and over again, well, now you're like, okay, well, why take it here when I could just take it here? My loss is going to be a lot smaller if I just take it here. And if I'm wrong right away. And I'm not having to have a 20 pip stop loss compared to like a 5 pip stop loss. So over time, as you start to do more of the back testing and you start to see the same things over and over again, that's the confirmation that you're going to need yourself to be like, oh shit, I've seen this happen over and over and over again. It's kind of like how you have the EMAs when the 50 comes down and it keeps pushing price down every time it bounces off of it. I see it happen almost every day. I'm like, shit, there's, instead of thinking that it's going to be a type 2 going up or a type 1 going up, I'm like, no, it's going to be a type 3. Watch. It'll bounce off of it. As soon as it bounces off of there, I just get in right away. Because if you're wrong, I'm wrong like 5 pips. What's 5 pips? Nothing.
And it's like most likely you're getting in around where that weekly high or weekly low is. So they're not going to go further than that. Right,
exactly. So you're basically, you're putting other things together, like what happened last week. Am I trading off of, is this last week's low that I'm trading off of? If it is last week's low, okay, great. What do they do when they get down here? Are they pinning, this like crazy?
Now that makes sense to me, because I saw it on the indicator, and I've heard about trading off of like previous highs and previous week's lows. So now it kind of like I can see the relation. So that's more of like when you're talking like M's and W's, you could see those formations at those like previous week's highs and previous week's lows.
Right. That's why those lines are there, for the previous week's highs and lows and previous days' highs and lows.
Gotcha.
I got a question.
Yes.
For example, if this one is the 50 EMA, for example, and the crossing is over here from the 5 and 13. Is it okay that I take that trade or wait that it cross the or take it like over here when it broke the 50?
Well, so if you're saying that the crossover happened here, right, and then the 50 is right here,
Yeah.
I mean, you have to ask yourself, okay, well, am I going to take this trade to be stopped out here, you know, for this little bit? Or like you said, am I going to wait until it pushes through and then get into the trade?
Okay.
You know?
Yes.
But you're going to learn, the more back testing that you do, the more you get familiar with how they behave.
Okay.
Right. And so once you understand how they behave, then essentially that's what allows you to get into the trades a lot earlier.
Okay.
You know,
What is the pair that you trade more?
pound USD.
Oh, pound USD. Okay. What about a euro? Euro JVP.
Euro JBP, that's another popular pair as well, yes. But I have more trades on pound USD than any other pair.
Okay.
Yeah.
All right.
All right. This one here. What are we looking at here?
Type 1 setup between
Type 1.
Yeah, between
Right.
London and US.
Between London and US. Type 1. Yeah, the regular, the multi-day M's and W's typically form peak formation high, peak formation low. Yes, Jeff.
Okay. So, do you think the best entry will be over here? Because sometimes when you know the M is done and the price goes down, and then do like a little retest, and then it come back up. This is I think one of the best entry.
Yeah, it is. But how do you know that this is going to go back up and retrace?
Well, when blue is ignored by the red one. No.
Right. So I'm saying, like, let's say this right here. Let's say this is what you see here. Right.
Okay.
And let's say you get into, are you going to wait? So let's just say that this is the, here's the M here, right? Are you going to, and you get in here because you want to get into the trade, right? So what happens when it retraces? Do you get what I'm saying? So are you going to, if you wait for a retracement, you might lose, what if it doesn't retrace? Then you're essentially, not missing out on the trade, basically. You know what I mean? When the pattern is here, it's in the right timing, right? It's in the right timing. You have a pattern. So essentially, I mean, you have what, 1, 2, 3, 4, 5, 6, 7, 8 candles in between. So I know the crossover is going to happen up here somewhere.
Yeah. Okay. All
right. So you have everything there to take the trade. So if it goes against you 2 candles, I mean, so what? We have a rule to get you out of trades in case they go against you. So I'm going to share with you in tomorrow's video.
Okay. Did you review the last test for the first week?
We went over the homework, is what we did. When it comes to the test, like if you guys pass, then you won't get any like, I won't tell you anything. You know what I mean? Like if I tell you something, it's because you probably didn't pass.
Okay.
So everybody so far is doing fine on those, and they're doing great. So yeah. So anytime that like there's something that's wrong or things that that I'm seeing that you're not understanding or anything like that, I'm gonna trust me. I'm gonna make sure that you get a that it brings it up to your attention, because obviously then you're gonna fall further behind.
Yeah.
You know, if you don't understand it. So that's why I'm going over the test or the homework like this, so we can make sure that you guys are crystal clear as far as what you're seeing and what it is and what it isn't, you know?
Okay.
So, all right. This one here, what are we looking at? Type 1, 2, or 3?
2 multi-session.
Felipe says type 2, London.
Well, the first leg is over here.
He's saying a type 2, London.
Yeah. No.
Type 2 New York.
London,
Type
US.
2, New York.
Type 2 multi-session.
But we know it's a type 2. We don't know if it's London, New York.
It's
Well,
both.
you gotta read London.
Both.
London.
So here's the answer to this, right? So
we're betting.
Leg.
Okay, I'm gonna put a standard lot size that it's I'm gonna say it's a type 2 standard lot. What's up? No,
Yeah.
and then we got a type, yeah, right there.
Maybe type 2 London.
Type 2 London. All right, so here's the answer, right? The first leg is this right here.
Boom.
First leg is here, goes up, comes back down, and then goes up.
Money.
Bam.
Put it into my MT4 account. Thank you.
Okay.
So that was the trade there.
One moment. This one like that. Oh, okay.
Yeah, but yes, you're right.
Yeah.
Let's see. This one here, what are we looking at here?
US type 1. And that's it. That's the only thing I feel.
All right. So Felipe's got type 3 London.
Type
So
3,
this
London?
type 3 London. So here we have price goes up, comes down, comes up, goes down, comes up, and then it goes. So it comes down to the bottom, goes up, gets stuck, comes back down, goes up, gets stuck again. You have a star pattern here as a second leg. Goes down and then down again. For this trade that you're talking about, as far as a W here,
Yeah.
the problem that you're going to have is that this W doesn't make it, doesn't go anywhere, right? So if you take this trade like this, right, I'm going to assume that the 50 is right here, right? And so the crossover is probably going to be somewhere around here. And so it doesn't give you a trade setup. So the better trade setups during London or during New York session are going to happen early in the session, not later.
Okay.
Because later there's very little small chance of you getting any good trades, even when you have something like this that's very visible, right? Like a W. But the problem is that you're going to run out of time, and you have the 50 there to stop it from going further.
Okay.
How about this one here?
Multi-session, London and US.
Oh, that's so pretty.
Type, I say type 3.
Type 3, right.
Yeah.
Type 3. You see how you just said it? Oh, it's so pretty, right?
Yeah.
So that's what you want to trade is the pretty trades. Why you want to trade the ugly trades?
No.
Right? You don't want to trade ugly trades.
Yeah.
You want to trade the pretty ones.
Yeah,
like
because
this.
we're confused. We're really confused.
So trade the pretty trades. Don't trade the ugly ones, you know? Remember, there's no need for you to think that you're going to trade every week. There's no reason for that. or trade every day, of the week, right? If you're trading this and you're picking out the best pairs or the best trade setups to take, your trade setups should be literally like 3 or 4 trades a week.
Yeah.
You know? Felipe, if you're thinking about possibly this being a type 2, the only problem with this, and we're going to talk about this in the video, is that they play around for too much time here.
Oh, okay. Yeah, that's what I thought. Yeah.
Yeah.
So that's the evening star right there.
Yes, it would be an evening star, yes. This would be one example of one, yes. Yeah.
Can you repeat what you say?
He was asking if this here is like an example of an evening star.
Okay.
And so, yes, it is.
So you said that they excuse me, they spend too much time going up?
There's too much time being spent up here. Yes, there's too much time being spent up here.
Okay.
All they're doing here is they're triggering all the freaking trades that are here. All the buys. They're triggering those trades up here. Is all that they're doing. How about this one here?
Yeah. Only one.
Two.
This one look like
I say a type 2 into a type 1.
type 1 and then
Mm-hmm.
this one.
Well, we definitely know we have a type 1, right? We definitely know we got that on a multi-session type 1. What's the most clearest one? Is it a type 1 or a type 2?
Type 1.
Type 2 in London.
No. There is no type.
It's the
So-
second leg W right there.
You're seeing this.
Yeah.
That's what he's saying. So type 2 pattern here and then into a type 1 here for the US session.
Okay. So this one is not valid? This one?
No, it's too late into the session.
Okay.
So I wanted to so for New York, usually like I don't take anything after like 10. Like
Yep. It makes it pretty hard to get something out of New York after 10:30 around that time. It does happen, but it doesn't happen very often. And then also another thing is a lot of the times if you're going to have a trade set up that actually happens in New York that happens late, it's going to be based off of news. So like,
right.
2 p.m. FOMC news or the 12, I believe it's 12 o'clock FOMC news that they do also.
So one thing I've also wanted, since you bring up the news, honestly, since I've started trading like this, I haven't opened up Forex Factory in a very long time.
Yeah.
Like I don't know if it's because I know I see the candle spikes, but it's just like if I'm not checking it while I'm back testing it, why do I really need to check it at all? That's my logic.
Yeah.
I don't know if that's the wrong logic.
I mean, I think that if you're starting out to trade it or to trading, I would just check it to see if there's anything that could basically they can use as confluence to say why they're moving a pair, right? So if you see that there's like, let's say pound news at 4:30, and there's basically nothing setting up from 3 o'clock, 4 o'clock or so, and you see that 430 news is coming up, and you see possibly like a first leg that's being formed and going into a second leg or something like that, you know. But I mean, the best times to trade, best days to trade are the days that don't have any news, because there's nothing that you know, that they're going to use essentially to move it,
Got you.
you know. But yeah, no, you're right. There's going to be a lot of days where you probably don't even check the news, and that's just because you're not used. You know, it's not something that you do during back testing, so it's just like a second nature type of thing, you know.
Yeah, because honestly, like when I started, I started checking like I would just only do the red folders, and I would even look at them to see like if they were really affecting it, like especially for Euro JPY. But some of them, they don't even really do anything to
Yeah,
the
exactly,
pair, essentially.
exactly. There's a lot of red folders in the news that don't move the market at all. So not all events are created equal.
Yeah, if it's a Trump folder, definitely going though.
Yeah, if it's a Trump folder, definitely going there. Yeah. All right, so no setup on this one.
Yeah, continuation. That's the only thing I see.
Right, continuation is the only thing that you see. Yeah. Is there a lot of red this week? I don't know if there's a lot of red this week. About this one here, any trades? No trades.
Not trade.
No trades.
Not trade. Only
Good.
continuation.
No, not even a continuation.
Yeah, not even.
Cool. And how about this one?
Ugh, I would say continuation, but it looks disgusting.
It looks disgusting, exactly.
Yeah.
If it looks disgusting, just skip it.
Not trade.
No trade. How about this one?
Disgusting.
Disgusting. We're gonna trademark that. We're gonna trademark that shit. Disgusting.
Yeah.
Disgusting.
Wow, terrible.
But this pair is looking disgusting today. Oh my god. How about this one?
Ah, j'allais les descendre plus tard, hein?
What's that?
Ou ben pas les descendre. Oh, sorry, my bad, but I didn't know my mic was on.
Okay, no worries.
Type 3.
Yeah, type 3.
Type 3.
Yeah. That's what it looked like.
That's what it looks like.
Yeah.
Well, the question becomes: Does this?
It's not valid though.
Candle, right? So does this candle go all the way up to the top?
No, it doesn't. So it's not valid.
It doesn't, because the top is being formed by this candle, and the low is being formed by this candle. So this is a no trade again. So let's see. We got one more here. How about this one?
Damn, beautiful.
Damn beautiful, right? Beautiful stuff you trade all day. See, there you go. First leg, second leg. Easy stuff. So those are the kind of trades that you want to basically trade. Setups like this. So no trading, disgusting. Disgusting is no trade.
Not trade.
Right? Beautiful is trade.
Yeah.
You know, it's literally that simple. Okay? That's all it is. All right, so we're about over here. Any questions before we let everybody go?
I do have a question, Mark. I just wanted to know, do you ever do like the pre-sessions just to look at the different charts and see maybe what's coming based on H1 or H4 or whatever? Do you ever do that?
Yes. I used to do that when I had time.
Okay. So you don't do it.
I don't have any time anymore, man. I'm teaching you guys.
So what
Okay.
I'm honestly what I'm trying to do is I've been trying to work with Mark, and what I would like to do is actually do that part, because I know that's something that a lot of people like, and I think it would just be great, like since we all know the method to kind of do analysis, and I just have the tools to do it. So I was just going to post like the analysis that I see for the week, run it by Mark. If he likes it, then I'll post it. But instead of posting on YouTube, we could just post it in the Telegram if y'all want.
Yeah, that'd be great. In the mentoring group?
Yeah, we
Yeah.
can put it in the mentoring group. Yeah.
And just do a weekly analysis and just break down whatever pairs y'all want to break down. Maybe after this meeting, what we could do is kind of like, you could
Do a poll on
message me
on the Telegram.
Yeah, do a poll, and then we'll see like what pairs you guys want to see breaking down, and then we could do a weekly analysis of those pairs and have them ready for you next week.
Yeah.
And just do it on a weekly basis.
So when we do this,
how's
how
that
many
sound?
people? Most of everybody trades euro and pound pairs. Yes.
Yep, pretty much, right?
Nobody trades like some crazy AUD pairs or something like that, or
Put the pairs you trade in the chat, if you could.
yeah. So type in the pairs that you guys trade.
Majors.
Yeah.
All GP pairs with flames. Pound/pound flames. Pound USD,
Yeah.
GJ, GU, GK. Okay, so a lot of pound pairs. EA, EJ. So mostly pounds and okay.
Pound and euros, yeah, pretty much.
Pound euros. Okay, cool. No NZDs. No pound NZDs. No euro NZDs. AU. Oh, AU. Aussie USD. Okay. RG, I got you. And mostly majors. Okay. Okay, that's a good list right there. Screenshot that. Boom.
So are you looking
All right.
at doing, just looking at the levels?
Yeah, so I mean, because like to really do an analysis, and Mark, you could correct me, I guess do kind of like a hindsight analysis. You gotta kind of look at either the levels and see, like we could look and see what levels are being formed currently, and then or where price could possibly go to, like in terms of like round psychological numbers where we can see it move up to if we see the cycle. So something along that line.
So it's just basically it's an overview, right? Of yeah, this would be a video, James. Yeah, it'd be a video.
Awesome.
Yeah, cool. So we'll do that then.
Most of the people, what I seen that most of the people who do analysis, they tend to fail because every time the Trump or the Brexit or interest rates, new like that, FOM, every time that news like that come, they override the complete analysis.
So
yeah, it's a headache to do analysis because mostly like 4 days of the week they full of news, and usually the news override or the analysis. So the analysis has to be done better daily. Depend on the news that is coming and how is the situation with the press.
So
Like
if you okay, go ahead. Sorry. Yeah. So like when I do my analysis, I do it both sides. So I do my analysis in terms of probability. So I show both the bullish side and the bearish side that either way it will go. So the thing is, nobody could ever predict where price is going to go next, right? All we could really look at is the pattern, the time, and the cycle. So when it comes to analysis, like hindsight analysis, what I'm going to show you is two ways, like in terms of where price can go. And then by the end of the week, you'll see where it can go. So if you look at actually like one of the recent videos that I'm doing in terms of my analysis, I show you both ways where the price can go. And I assure you, if you look at price now and you look back at that video, price did go that second path.
Okay. Yeah, for you, it's a little easy, but for us, we too new. Still,
Sorry, I can't hear you.
yeah. I mean, for you that you are more advanced, it might be easy, but for us that we are beginners, it's too hard. We're still too fresh to do analysis. That's what I think.
Well, it's going to take time for you to learn, right?
Yeah.
So that's what we're here for, and that's why you're here as well. And that's why everybody's here to learn, right? And it's going to take time, but I mean, as long as you do your part and put the time into it, I mean, we're going to show you the map, right? And then it's just really up to you to go through the next steps, right? And to do it and to understand it and stuff. So. But you're going to have all of the tools necessary to learn it, you know?
Yeah, after
so,
I believe I'm going to start doing analysis after I finish one lesson.
yeah, and so I think that once you guys finish, like, let's say, I want to say it's like week 5, where you'll have like, you'll basically already have the videos of like, entry and exits and cycles and levels and stuff like that. You'll have a more complete picture of everything that we're talking about. And so then you could really start to do your own analysis and be like, okay, well, what level am I? Am I in level 2, 3? Am I seeing for peak formation low or peak formation high? So you'll get to see all that stuff in a lot more clear light once you know everything.
Yeah. After week 5, it's more, it's more okay right now.
Yeah. So you'll get a lot more clear after that. So, but yeah, no worries, man. No worries. We're gonna get there. So.
Okay.
All right.
All right.
All right, guys. Well, good session, guys, and we will see you, in the London session. Tom, I got your email. Thank you so much for sending it to me. But yeah, guys, have a good night, and we'll see you again soon during the London trading session on Tuesday. All right.
Okay.